Have you thought about buying real estate recently? I know the interest rates are high, but sometimes real estate is actually a good investment. Whether a real estate deal can be a really good deal for you or not, we have built a specific tool for you so you can actually be confident in making that decision. Let's jump in. And that product is called Real Estate Investment Tool, right? Duh. And you just go there and boom. So how does it work? It's really, really simple. First, we ask you your annual income. You can put that number, and then we actually make an educated guess on what your federal tax rate would be. And I'll explain it to you later why that is important. But if you need to change it, if you're like, you know what, my annual income actually is 152K, and my tax rate is correspondingly 32%, then you can update that, and voila. So this will actually show you that, okay, now things have been updated. So let's jump in. You want to buy a property, and it's a new property. It's not existing. You want to actually explore whether it would make sense or not. You can name it. Let's say this is on Lotus Avenue, and it's in Kansas or Texas, and the square footage is, let's say, 2,400 square feet, and purchase value, say, approximately 450K, or you can change it to whatever you think is the right price. Let's say it's 428K in this case. If you're a veteran or a first-time home buyer, the US government actually gives you a pretty good deal in terms of you only have to put 3.5% down. So if that is the case, check the box. If not, just keep going. Are you planning to take a loan? If the answer is yes, press that. Typically, it's 20%. So this is what you will end up. Actually, let's make the numbers a little bit easy to understand. So we'll keep it at 450, or maybe we'll keep it at 500, and that way it'll be easy to follow along on what we are exactly doing. So here we go, and this is 500K. 20% down is $100,000. Interest rates. Right now, the interest rates are pretty high. Even if you have perfect credit, you're talking about, let's say, 7.8%, or maybe even 8%. So very high interest rates. Loan tenure 30 years. You can change it. Let's say you change it to 15. You can do that. But default, and I always recommend going with the longer duration. You can always pay off early, but you can never extend the time frame. So get a long term loan, even if you can pay off early. An expected rent. Let's say this unit will potentially rent for $2,400. How much is the HOA fee? So this is where we actually do a lot of the rigor ourselves, a lot of the data collection ourselves, so you don't have to do it. We know how much HOAs cost in general in terms of percentage of monthly rent. So we do that already. But you're like, you know what? This is an independent house and there is no HOA. Lucky you. So no HOA, you put that to 0. Property tax for Texas. Yep, we should have done it. For Texas, it should have done it, but if not, we can, yes. So property tax is 2% in Texas, but let's say you live in a more expensive county and it's, say, 2.3%. You can change that, actually, 2.3. Let's say, or 3%, right? If you're in a really expensive, you can change that, and this is your annual tax. Insurance per year is 0.35%. That's based on our research. If it's higher or lower, you can adjust that. Closing costs, typically 3% when you close the loan. Maintenance and repairs, this is typically 10% of monthly rent or yearly rent, whichever way you look at it. So based on all this, and then last thing is, are you going to manage your property or not? If you are, then you are saving about 5 to 7%. If not, and we explain this to you, if the renter calls, do you pick up the call or do you have a manager? If you have a manager, you have to dole out 5 to 7% of your rent annually to them. So if you're like, yeah, I'm going to manage this property myself, now you can say, okay, time for action. Let's see if this property makes sense or not. So looking at this property now, you can see that we put all the details here, 8%, $500,000 worth of property, monthly rent $2,400, 30-year loan. Based on this, how do things look? Your cash outflow is going to be this much, and cash inflow is going to be, cash inflow is going to be this much, cash outflow is going to be this much. Most of it is mortgage, but there are others like property tax and so forth. So is this deal worth it? So you actually go in and take a quick look that annual inflow is close to $50,000, $48,000. Annual outflow is actually $50,000. So net cash negative, but there are other benefits. Properties appreciate typically, although it's not happening in Austin and other areas of Texas right now. The property prices are declining, but over the long term, and real estate is always a long game, over the long term in the US, property rates appreciate about 2 to 3% a year, say about 3% a year, slightly above inflation. So you take that inflation into account, and you also yearly time investment. Your time is going to be invested in the property. We take it at about 20 to 40 hours a year, and that has some value. So net you will gain about $11,000. Now the more important thing is $11,000 worth everything that you're going to be putting into the property? So for that, we actually compare your returns with S&P 500 returns. So let's take a look. If so, on this property, your return will be $8,000, including cash and non-cash, right? Which is, non-cash returns are 11,000, but your cash returns are negative. But if you were to invest your down payment and closing costs and everything into S&P 500, your returns will be $11,500 per year. So this is actually not a good deal. This is a terrible deal. But let's say you are able to negotiate and change this, right? And also we have some AI. You're like, hey, why is this a bad deal? Our AI can actually answer a lot of your questions. So feel free to explore that. But you're like, you know what? Actually, I can get more rent for this thing. So how do I do that? Oh, the AI has to finish its thing. Once it's done, you can actually come back in and again, our AI will do a pretty thorough job of explaining what's going on, why this deal is not a great deal. And you can ask more questions as well. Like, hey, what if the rent changes? What if that changes? But if you believe in just doing simple math, you can just go ahead and say, okay, what if I'm able to negotiate the price down to $450, and actually I can get a little more rent here. Maybe I can get $2,700 or $2,800 a month. And also property taxes or insurance, actually is going to be only, say, $1,000 a year. How would that change the math? And let's say closing costs, you are able to get, some cash back from the seller, and it actually is going to only cost you 2% in terms of the closing cost. So now when you do that math, you're like, okay, let's see. And maintenance and repairs, let's say you are a handyman yourself. You can actually do a lot of things. You're like, you know what? Just make it 5%. I can actually shave off a lot of the cost. How does that look now? Okay, now the numbers have changed. Actually, it's a good deal. Even at 8% interest, this property is probably worth investing in if you can get the rent of $2,800 a month and you can negotiate the price down at $450. Even at 8% interest, this is a good deal. So go ahead and use this tool, and again, you can interact with our AI to find out why it's a good deal and what you can do. But please go ahead and take a look. Your mind will be blown away by how easy we have made it for you to evaluate whether real estate investment, a particular investment that you have been salivating over, if it's good or not. So go right ahead, jump in, and let the math not stop you from making investments. Thank you so much.